Welcome to day 3 of 12 of the 12 Days of Finance. Today I'm talking about student loans. I recently had a client appointment in my office with a long-term client, and we had a conversation about student loans. Now, this is an individual in their 50s, and they're still dealing with student loan debt from their own education. But I've seen a variety of situations, people across all decades of life, either dealing with their student loans or their children's student loans. And I wanted to do a segment today on some financial advice for dealing with student loans when you're nearing in on retirement. So stay with me. The numbers really shocked me about student loan debt, but 13% of people 50 and over are still paying student loan debt, and 4% of people over the age of 62 are still paying student loan debts. Now, during my career, I have met people in their 50s and 60s who are paying student loan debt, and of course, no shade or heat to them. Sometimes situations happen, sometimes parents end up with their kids' student loan debt, and sometimes people just take a really long time to pay off their own student loan debt. There are some things as a financial advisor that can help you clear up the situation or prevent this situation from ever happening. And I wanted to share those bits of advice with my audience today. So first, for people who are younger, and we really need to spread the word among Gen Alpha and millennials and people who are young, that when they're 16, 17, 18 and making decisions about college, there are some decisions that can help head off student loan debts later in life. One thing that a lot of people don't really know about and don't really utilize are community college systems. Sometimes you can get a 2-year degree and then parlay that into a 4-year degree. Some community colleges are actually feeders into 4-year universities, and 4-year universities hold spots for graduates of community college. But community college is often a lot cheaper and a lot more accessible than a big name 4-year university. And oftentimes, for someone who's young, who may not know what they want to do, or who wants to save some money, perhaps even some time, community college can be a great route to go to for a year or two, or even just a summer to get some credits and transfer them into your 4-year university. I myself, when I was doing my undergraduate university, I took summer classes at community colleges, which were much, much cheaper, and just transferred the credit into my 4-year college, and it saved me actually a year of university education. I was able to graduate a year early, and it saved me tens of thousands of dollars and probably tens of thousands of dollars in student loans. So anytime you're looking at a university with a younger person, whether it's your child, niece, nephew, cousin, or someone who's just in that phase of life, look at the community college that's connected to that university. And could a year or two in community college save that young person a lot of money and a lot of student loan debt later on in life? Next, I would tell people who are just finishing their degree and starting to pay off their student loan, or even people who have been paying off their student loan for many years, never do income sensitive payments and never do forbearance. It's a trap, it's a trap, it's a trap. When people call and they're having problems paying their student loans is one of the first things that is offered to them. But what is not adequately explained is that student loan is still accruing interest during moments of forbearance and during income sensitive payments. So basically you're accruing interest on interest over time, and the debt just grows and snowballs until it comes to an unmanageable amount. Everyone who I have encountered as a financial advisor who ended up with just an enormous amount of student loan debt, maybe they started off with 50,000 but ended up paying back 120,000, at some point, sometime, somewhere, did forbearance or income sensitive repayments. I'm telling you 110%, it's a trap. Don't do it. Do whatever you have to do to pay back that student loan and keep paying back that student loan. But forbearance and income sensitive payments will get you in a cycle of interest, compounding on interest, and will put you in a sphere of never paying back that student loan or paying back that student loan 30 or 40 years later. So this is an important one. And this is for people who are out in their working career. Never pay for your own advanced education or training. That should be the domain of your employer. And oftentimes as part of our compensation packet, there is opportunity for reimbursement for higher education expenses. They may not cover all of it, they may cover a sizable portion of it, or if they do cover all of it, it may be part of your employment contract that you have to stay a certain number of years after completing that degree in order to pay back the company and to have that loan forgiven. But if you can get your company, if they want you to have certain advanced education or training, or you need a master's degree to move up, or you need a certain certificate or credential, that really should be the domain of whatever company you're working for to help arrange and make that happen for you. So get to know your benefits, get to know your compensation package, and see what is required for advancement in your job. And if you have a bachelor's degree, anything above that should be paid for by your company or your organization. You should not be coming out of pocket for these advanced degrees. I've seen people who often end up with student loan debt in their 50s or 60s. It's not because of their undergraduate degree, it's because of the master's degree they needed to advance their careers in their mid 30s or 40s, and they're still paying on that debt 10, 15 years later. So don't fall in that trap. Get a company to pay for any advanced education and training that you may need. Next, advanced training and education beyond a certain point, it better lead to higher pay and more career mobility. I've seen people pursue vanity degrees and degrees of passion, and that may be appropriate under certain circumstances, but for a lot of people in a lot of circumstances, it ends up being a colossal waste of money and time. And especially if you're pursuing advanced training and education in your late 30s, 40s, into your 50s, there better be a direct correlation. I mean, as soon as you finish that degree, you get a pay bump, or you get a promotion, or a pay bump and a promotion. And it better be very, very tightly correlated to you pursuing that advanced training or degree. If there is no promotion, if there is no increase in pay, if there is no upward mobility for pursuing that degree, then why are you pursuing that degree? A vanity degree is nice. Maybe it's something you can do after you retire in your spare time. But if something isn't going to lead to more money or advanced placement in jobs or a new career opportunity, it's not worth your time. And I especially say that for people in their 40s or 50s. I've seen people pursue vanity degrees in their 40s and 50s, and they end up paying out of pocket for it. And it's just absolutely calamitous to their long-term financial plans. So if you're getting more money, if you're getting advancement, yes, do it. If you're not, or it's not clear, don't bother with it, especially if you're footing the bill for it. Once you're past the age of approximately 45, you really need to do a cost-benefit analysis of further education and training. And that's because you're starting to get close to the wheelhouse of retirement. And some of these advanced education and training degrees are quite expensive. And if you're 55 and you have 7 more years of work, you may not see maximum benefit for that additional certification that costs $25,000. So just beyond a certain point in your career, you have to look at how many years you reasonably have left working in the field versus how much you're paying versus how much more will you actually be earning with this certificate or degree. If you do the math and the numbers don't add up, it just may not make sense to pursue that advanced certification or degrees. And I have certainly met like older financial advisors who are probably 3 to 5 years out from retirement, who told me, they looked at becoming a certified financial planner, but when they did the cost benefit analysis, it really didn't make sense because they were planning to retire in 3 years. And I certainly understand that justification. So beyond the age of 45, you really are cracking out that pencil or pen and Excel sheet, looking at how many years you have left in the field, looking at how much that advanced certification is and how much increased earning you will get for pursuing that advanced certification, and trying to determine, is it really worth it to pursue that degree or advanced certification in your field. So the thing about student loan debt, especially if you have student loan debt in your 50s or 60s, the only way over it really is through it. And I've seen all flavors of student loan debt. And I think a lot of people got sidetracked during COVID because student loan payments were temporarily suspended for quite a considerable amount of time. I really encouraged clients with student loan debts to continue paying during that time so they really could get a leap start on student loans, and some did, but many didn't. I think Biden's promise to alleviate $10,000 of student loan debt sidetracked a lot of people, and it didn't end up coming to fruition. I always tell people when I see these student loan debts, the only way over it is really through it, and you have to hunker down and pay it off. And if you're making the bare minimum payment and have been making the bare minimum payment for 20 years, you will likely never pay this thing off. You have to pay well in excess of the minimum payment. And that may require a lifestyle change. It may require, can you get a side gig to bring in some extra money? Can you drive an older car? Can you live in a more affordable location? Are you up for promotion this year and earn more money? But I wish there was some magic spell or magic potion I could tell people with student loan debts to help them pay it down faster. I wish there wasn't 13% of the population age 50 and over who had student loan debts. But if you are in this situation, unfortunately, the only way over it is through it. Come up with a plan, pay more than the minimum, and do your best to hunker down in payment. Remember, forbearance or income sensitive shouldn't be an option. You should be paying much more than the minimum to be able to pay this debt off and retire it permanently. Tell me what you think. Tell me what you like. Tell me what you don't like. If you found this information useful, please like, please share, and please subscribe.